What up, guys? In this lecture, I'm going to be going over my model. So what it is a rejection out of a 5-minute, 3-minute, or 15-minute fair value gap towards my drawn liquidity with the highest time frame inverse fair value gap out of the manipulation leg into one of those fair value gaps. So I only trade continuations, meaning I am trying to catch the higher low, not the whole reversal. I'm trying to catch the continuations off the higher lows. I'm not trying to catch the whole entire move down. So in this case, I am trying to catch one higher low right here as well. So uptrend. I only trade continuations. So what these are? Oh, sorry. Is I'm trading. I'm trading with the trend. Is basically what it is. So I'm waiting for my daily buys. So if I'm really strong in my daily buys for being bullish on the day, then I would only take buys. That obviously can change. My daily buys does change. But what I do wait is for a continuations. So higher high, higher low, higher high, higher low. I'm trying to catch a higher low. So what this is I'm trying to catch. Oh, what the fuck is happening? I'm trying to catch this move right here that's manipulating down. So an A plus setup would be if we're making a higher high and then the higher low taps into a 5, 3, or 15-minute fair value gap. And then what I wait for out of here. What the fuck is happening? All right, sorry. And then what I wait for out of here is the highest time frame inverse fair value gap out of this manipulation leg. This is a manipulation leg is because we're going down and we're manipulating into a gap, either a 3, 5, or 15-minute gap. So now what I do is after I determine what the highest time frame inverse fair value gap of this manipulation leg is. So let's say there was a 1-minute gap right here. Then there was a 2-minute overlapping that gap. Oh. And then there was a 3-minute overlapping that. In this case, I would take the 3-minute because why? It's the highest time frame inverse fair value gap out of the manipulation leg into the 5, 3, or 15-minute gap. So what my entry would look like is enter right there, stops at the lows, and then TP at the internal highs. But if the RR is bad, then I'll just target a 1-to-1 or put my TP at my drawn liquidity. So say my drawn liquidity was Asia highs and they were all the way up here. So let me mark this to Asia high. Then I could place my TP right here, and then I would go break even at this internal high right here. Same. I'm gonna give you examples for the downside as well. So say we're in a downtrend, making lower highs, lower lows. What I'm trying to catch is the lower high. One of these, this one right here, or this one right here. So A plus setup is if whenever we're manipulating up, we're tapping into a 3, 5, or 15-minute fair value gap, and then what I look for is what the fuck is happening? What I look for out of here is the highest time frame inverse fair value gap out of this whole entire manipulation leg into the 3, 5, or 15-minute fair value gap, which is right here. So once again, say we have a 1-minute fair value gap, we have a 3-minute fair value gap, and then we have like a 5-minute fair value gap. If we're tapping into a 15-minute gap, then in this case, say this is a 15-minute fair value gap, then I would take, as soon as we inverse that 5-minute, I'll place my take profit at internal lows. If it's a 1-to-1, in this case, it would be bad RR, so I would target 1-to-1. In this case, I would just go break even at the internal low, which would be right here. All right, I'm going to go to the actual market and give you guys some good market examples. I'll give you some 5 minutes. All right. There was actually one this morning. I'm going to go to that one. All right. New York AM. All right, so the trade I took this morning was a rejection out of a 3-minute fair value gap. You see I'm on the 3-minute time frame. Market open. I was really bearish on the day because we were disrespecting a lot of high time frame PDRAs to the downside, or showing that we're going to go to the downside. So I was really bearish. And so what I did is I waited for a tap into a fair value gap, which we got a 3-minute tap. And then I saw that we were displacing down after we tapped into it out of 50% of the fair value gap. And then I scaled down to the 1-minute. I was seeing if we had any inverse fair value gaps that we could have taken, which in this case, there's no fair value gaps. So I went to the 30-second and I saw what? We have a baby fair value gap right here, really tiny. But a fair value gap at the end of the day is a fair value gap, so you can still take it. So what I waited for is for price to inverse it. Let me turn this off. And then price inverse this gap on this candle right here. I had my stops right here, and I targeted internal lows for around a 1-to-1 RR.